The United States job market, once seen as a symbol of resilience, is showing serious signs of stress. Recent reports have revealed that job growth has slowed dramatically, with only 22,000 new jobs added in August 2025, one of the lowest monthly gains in years. Experts say this pace is well below what's needed to keep up with population growth and inflation. Meanwhile, the national unemployment rate has edged up to 4.3%, the highest since early 2021, though still relatively low in historical terms. Long gone are the days when 200,000-plus jobs per month were typical. Economic uncertainty, rising interest rates, tariff pressures, and political instability are sapping employer confidence. Workers across many sectors, especially manufacturing, finance, and construction, report fewer hiring announcements. Even professional services and business sectors, once considered robust, are beginning to stagnate. Some states are faring worse. California, for example, is now one of the hardest hit, with unemployment climbing to 5.5% as job losses mount in tech, entertainment, and government positions. At the same time, a concerning data revision revealed that the U.S. created 911,000 fewer jobs through March 2025 than previously reported. Non-farm payrolls were revised downward. Sectors like leisure, retail, and business services lost tens of thousands of jobs in the revised data. The new totals show that hiring has been weaker for longer than many analyses suggested. Even though unemployment remains in the low 4% range, the labor force participation rate has been slipping. In recent months, fewer people are actively working or looking for work, which masks the real unemployment problem. Many have given up searching, are discouraged, or are stuck in part-time, low-wage, or precarious work. Underemployment rates, those working part-time but wanting full-time, or stuck in jobs far below their skill levels, continue to be high. What makes this crisis particularly dangerous is the rise in long-term unemployment. More than 1.9 million Americans are now jobless for 27 weeks or more. That's about 1 in 4 unemployed people. It's a number typically associated with deep recessions, not a relatively stable economy. When someone remains unemployed this long, skills erode, financial hardship deepens, savings are exhausted, and psychological toll increases. Reports show that older workers, recent graduates, and workers in industries losing demand, such as retail or traditional manufacturing, are disproportionately affected. At the same time, job creation numbers have consistently disappointed expectations. Economists had projected tens of thousands more jobs per month than what materialized. Forecasts have been repeatedly missed. In January 2025, for example, employers added 143,000 jobs, well below many estimates. Even though unemployment rate dropped slightly to 4%, the slow growth exposed weakness in hiring momentum. Hiring and job openings are also slipping. The Job Openings and Labor Turnover Survey, JOLTS, shows fewer quits, fewer firms posting new job openings, and slower hiring rates. That suggests fewer people feel confident enough to leave their current roles, that employers are uncertain to commit, that many jobs being lost are not being replaced or are replaced with weaker roles. The drop in quits rate is often seen as a signal that workers are not finding better opportunities and may feel stuck in unsatisfying positions. Adding to the concerns are revisions of previous employment reports. The Bureau of Labor Statistics revised the job creation figures downward by nearly 1 million jobs for the year through March 2025. These revisions affect policy decisions, perceptions of economic strength, and market reactions. What was thought to be moderate growth is now revealed as weaker growth when accounting for updated data. Economic inequality is becoming more visible through the dimensions of this job crisis. Jobs that are being created often offer lower wages, fewer benefits, and less stability. Many workers in service industries, retail, and hospitality are employed part-time or in hourly jobs that do not offer health benefits or retirement plans. The discrepancy between high-paying tech or finance jobs and these lower-wage roles is growing, making it harder for people to achieve financial security even when they are employed. Parts of the workforce are more vulnerable. Young people entering the labor market, recent college graduates, and those with less education are finding that a college degree no longer guarantees job security. Reports note that an increasing share of the long-term unemployed are college graduates, a reversal of older norms where those with degrees usually found re-entry faster. Geographic disparities remain stark. Rural areas, especially in the Midwest or parts of the South, face shrinking opportunities as factories close or relocate, and as automation replaces many kinds of repetitive labor. Urban centers may show hiring, but cost of living is high, pushing many into multiple jobs or into debt. States like California, despite being large economies, are seeing job losses and unemployment creeping up, particularly in certain sectors. Inflation adds to the squeeze. With wage growth of around 3.9% in private sector jobs, many workers find that their incomes are still losing ground after adjusting for inflation, housing, healthcare, and education costs. Earnings increases are positive, but living costs are rising faster in many areas, which means real income stagnation or decline for many workers. Further, many job seekers are discouraged or face obstacles like skill mismatch. Employers increasingly demand digital skills, higher education credentials, experience, leaving capable workers behind. This leads to skills mismatch, where jobs may exist, but people lacking formal training in certain fields struggle to get hired. Also, those who are unemployed for long periods often lose confidence and opportunities fade. The crisis is not just in numbers, it is in the daily lives of millions. People who once counted on steady employment now struggle to pay rent, healthcare, or debt. Families adjust by delaying big life decisions, having children, buying homes, investing in education. Some retire later, others take on multiple jobs. Mental health issues related to job insecurity are increasing. Communities that were once stable are now fragile. Business uncertainty plays a large role. Employers face higher input costs, supply chain disruptions, rising interest rates, and trade tensions. Many hesitate to hire full-time workers, preferring temporary or contract labor. Sectors sensitive to economic cycles, construction, manufacturing, finance, often see layoffs first when conditions worsen. Reports show that government employment has declined in some months, contributing to weaker overall job numbers. The policy responses are coming but uneven. The Federal Reserve has begun cutting interest rates in response to weakening job data and long-term unemployment. Unemployment benefit claims have fluctuated. Recently, jobless claims dropped to about 231,000 in the week ending September 13, 2025, after a previous spike. That drop is better than expected, but still high enough to show ongoing distress in the labor market. What is perhaps most troubling is the erosion of economic mobility. For many workers, getting laid off means falling behind. When savings vanish, retirement plans are delayed, health insurance may lapse, and opportunities to retrain or switch careers can be limited. Long-term unemployment, once rare in periods of economic recovery, now affects millions. Once unemployed for 27 weeks or more, over 1.9 million Americans are in this category. This lengths of unemployment often correlate with permanent earnings loss. Looking forward, solutions are difficult but essential. One route is skills retraining and education. As demand shifts toward technology, healthcare, green energy, and AI-related fields, government and private programs must invest in upskilling workers. Community colleges, online courses, and apprenticeships could offer paths for those displaced by automation or industry decline. Another approach is targeted policy support. States facing especially high unemployment could get relief through infrastructure projects, tax incentives for business investment, and support for small business growth. Federal policy could help by expanding unemployment insurance, boosting job placement services, and improving data tracking so that revisions like the 911,000 fewer jobs through March 2025 are anticipated rather than shock. Labor force participation must be addressed. Encouraging people who left the workforce, whether due to caregiving responsibilities, health issues, or discouragement, to return requires flexible work policies, childcare support, and mental health resources. The decline in participation rates to around 62.2 to 62.3% is a warning sign. Improving wages and job quality is equally important. It's not enough for people to have jobs. They must have jobs that pay livable wages, offer benefits, and provide stability. Addressing low pay in service sectors, ensuring fair pay, strengthening labor rights, and perhaps raising minimum wages could help reduce underemployment and job dissatisfaction. Finally, the role of economic stability and trust in data cannot be overstated. Accurate job reports, transparent policy decisions, and stable investment climates are essential for businesses and workers alike. The revisions of past job numbers have shaken confidence. When estimated payrolls are revised down by hundreds of thousands, it undermines planning for families, companies, and governments. The USA job crisis is not a temporary setback. It is a crossroads. If Americans do not address it with urgency, the cost will be long-term: shrinking middle class, greater inequality, lost potential. But if handled with bold policy, targeted investment in people rather than machines alone, and compassion for those left behind, there is still time. The workforce is adaptable. The economy has room to grow. The American promise can remain alive if the decisions made now are grounded in reality, powered by work, and animated by hope.